Hello, good morning, everyone. How are you all doing? Please tell me if I am audible and I am visible to all of you. Please tell me, please confirm once. Good morning, everyone. Good morning, Isha. Good morning, Pankaj, Kirti, Abhishek, Ganesh, Meraki, Aditi, Jyotish Kumar, Vishnu Prasad. Good morning, everyone. Please confirm if I am audible and visible to you. Am I audible and visible to you? Am I loud and clear? Yes. On this Thursday morning, welcome to the session of PGBP. And yes, Navratris are also going on, so a very, very auspicious occasion to do an important chapter like PGBP. Yes. Good morning, Ravi. Good morning, Deeptesh. Good morning, Om Kakati. Good morning, Ravi Gupta. Good morning, everyone. Very good. Good to see you all in this early morning. Good morning, Jyoti Bharti. Yes, good morning. So, what a fantastic day to start the PGBP part 2. Yes, great. Good morning, everyone. All right. So, guys, PGBP, as I've told in the earlier lectures, PGBP is the most important, one of the most important chapters of your syllabus. And yes, not only for intermediate, it is important for final as well. So, CMA final has got the entire portion of CMA Inter PGBP, which I am teaching right now. The entire portion is applicable for CMA final students as well. So this particular session is relevant for both CMA intermediate students and CMA final students. Of course, for CMA final students, there are some additional concepts which are incorporated in this particular series, which will add on to the intermediate course. But yes, intermediate course is the basic thing which is applicable for CMA final students as well. And of course, for CMA intermediate students, this is the most important chapter of your syllabus, guys. It will hold a good weightage of marks in the examination. So yes, you need to study this chapter very well. Its concepts should be really clear in your mind, and try to remember the concepts as we move on. Revise the earlier concepts so that your concepts are fresh in your mind, your concepts are clear in your mind. That is very, very essential for this particular chapter. This chapter is PGBP, Profits and Gains of Business and Profession. And in the earlier lectures, in the last lecture, guys, we had studied depreciation. Okay, one of the most important expenses of our PGP chapter, which is depreciation. Good morning, Chirag. Good morning, Vivek Maurya. Good morning. Yes, Isha, almost whole revision session is almost for whole CMA Inter DT. Almost whole. Yes, I'll be covering till May end. I'll be covering almost all the chapters of CMA Inter DT. At least all the important chapters. Okay, at least all the important chapter. Time permits, I will do the unimportant chapter as well. So depreciation we were talking about. Depreciation is one of the most important topics of our syllabus of PGBP, and yes, the most important expense of PG head. So yes, this particular expenditure is huge for the capital oriented, capital intensive industries, like industries where plant and machinery is being used, industries where sort of heavy machinery, heavy building, heavy equipments are used. Over there, depreciation is one of the major expenses of those industries. Even for other industries, guys, even for non-manufacturing sector, even for service sector, depreciation forms an integral part of their books of accounts. So yes, depreciation was the thing which we had studied in our last class, in the last revision lecture. If you have not seen PGBP part 1, then please go to the YouTube channel, and just 2 days back I had uploaded part 1 of PGBP chapter. So watch that and then come back to this particular video. All right, so today we are going to start an important part of the depreciation concept, and the name of the part is terminal depreciation. Name of the part is terminal depreciation. First of all, I'm going to tell you, what do you mean by terminal? What is the meaning of this word called terminal? Okay, meaning of this word terminal is end of life. Terminal means end of life. So whenever the life of a plant and machinery ends, that is known as terminal. Terminal means end of life. So terminal depreciation means depreciation which is levied at the end of life of an asset. Sir, what is this joke, sir? This is such a big joke. I think this is hilarious, guys. When the asset is coming to an end, then sir, why depreciation? When the asset is coming to an end, then why depreciation? There's no point of charging depreciation at the end of the life of the asset. Rather, depreciation should have been charged during the working life of the asset. Sir, why at the end of the life of the asset? Yes, guys, that is the biggest catch in this particular concept called terminal depreciation. Now, before I come on to this concept of terminal depreciation, let me introduce you to you one specific kind of business, which is power generating unit business. These are the business where electricity is being generated. These are the years where these are the units, these are the companies who are into manufacture of electricity, who are into heavy plant and machinery. So, manufacturing of electricity entails heavy plant and machinery. There is heavy plant and machinery which is installed to generate electricity. So these are the units which are known as power generating units, which are responsible for generating electricity. Heavy plant and machinery is there in this particular sector. Now, Government of India has given certain special privileges to power generating units. So why would Government of India give privileges to power generating units? Guys, power generating units are heavy capital intensive companies where capital is huge, capital involvement, capital infusion is huge. This is the characteristic of power generating units. So naturally, guys, since a lot of capital infusion is required and returns are also a little slow, therefore government has given a huge benefit to power generating units. So what is the benefit? Do you remember in the earlier lecture when we were doing depreciation, your hands on the keyboard, and I'm going to ask you a question. Do you remember in the last session we had discussed that depreciation is levied only using one particular method? In income tax, there's no option of choosing any of the methods like financial accounting. In income tax, there's only one method which is used for applying depreciation. What is that method? Please write in the chat box. I want to know. In the last class we had studied what is the method which is employed by the Income Tax Act to compute or to levy depreciation. Please write in the chat box. Perfect. Pankhudi, Pankaj, Megha, Saksham. Yes, guys, only WDV method is allowed. Only WDV method is allowed. SLM method is not allowed under Income Tax Act. However, SLM method will yield a higher depreciation. Okay, so it will be beneficial for the assessee because using SLM method, the depreciation amount will be higher. If the depreciation amount is higher, the profits will be lower. If profits are lower, taxes will be lower. So according to the Income Tax Act, SLM method is not always prefer SLM method because it will lead to higher profits. But according to the Income Tax Act, SLM method is not permitted. SLM method is not to be chosen by you. You can only choose one and only method, WDV, written down value method. That is the typical method which is used under the Income Tax Act for computing depreciation. Now, guys, Income Tax Act has carved out one exception. During lecture 1 also I told you there's only one exception to this golden rule that WDV method is employed, and the exception is for power generating units. For power generating units, Government of India gives you an option. You means power generating unit, an option. They can either choose WDV on block of asset method, or they can choose SLM method, straight line method, for computing their depreciation. This is an option which is given to only one kind of business, which is power generating unit. No other business has this option. All other businesses have to mandatorily follow WDV method. Only power generating unit has the option to follow either the WDV method or the SLM method. Either of the two methods are to be followed by the Income Tax Act, by the assessee. So yes, naturally, guys, SLM methods yields into a larger depreciation. Therefore, that is much more beneficial for the assessee. Now, there are certain restrictions where while an assessee uses SLM method, there are certain restrictions. Restrictions are that assessee who's using SLM method cannot have the benefit of additional depreciation. Guys, already Government of India is giving you such a big benefit by allowing you depreciation on SLM method. Now, additional depreciation is not eligible for the power generating unit. This is the condition. If you want to use SLM, additional depreciation is definitely not permissible. Additional depreciation is permissible for the assessees who are using WDV on block of asset method. So additional depreciation is a benefit which is withdrawn if you use SLM method. Then one benefit is given if you use SLM method. One benefit is given. What is that benefit? Benefit is of terminal depreciation. Terminal depreciation is the benefit which is given if the additional depreciation benefit is withdrawn. So if you withdraw additional depreciation, if you do not claim additional depreciation, you will be eligible for terminal depreciation. So this is the background of this concept called the terminal depreciation. Who is eligible for terminal depreciation? Only and only power generating units who have made a choice to get their depreciation done by SLM method. They are eligible to charge the depreciation using the terminal depreciation method. That is the bottom line. That is the crux of the matter. Okay, sir. Got this entire concept now, sir? We need to understand, what do you mean by terminal depreciation? What do you mean by terminal depreciation? So that is what we want to know. Okay, so before coming to this complex formula, so you can see this complex formula which is written on the board, and yes, many of you might think that, sir, ratta marna padega, we need to mug up this complex formula. No guys, before coming to this complex formula, I'm going to write an example to make you understand what is terminal depreciation, and then I'm going to come to the formula. By understanding the concept, you might not be required to mug up the formula. Mugging up will not be required. Okay, so guys, I purchased, let me use a different color ink so that you are able to distinguish. Okay, I purchased a machinery for rupees 9 lakhs. Suppose depreciation which is eligible on this particular machinery is at the rate of 15%. Depreciation which is eligible on this machinery is at the rate of 15%. So 9 lakh rupees multiplied by 15%, I am eligible for depreciation of 1,35,000. So the WDV at the end of the year, which is remaining of this particular machinery, is 7,65,000. This is the WDV which remains at the end of the year. So 9 lakh minus 15%, 7,65,000 is the WDV. Now, this is the only asset in the block. Okay, there is no other asset in the block. This is the only asset in the block. In the second year, I sold this machinery, and the sales consideration which was fetched by me, suppose is 2 lakh rupees. I sold this machinery for 2 lakh rupees. So I had incurred a capital loss of 5,65,000 rupees. I incurred a capital loss. Board is not clear. Some students are saying board is not clear. Just refresh, guys. Just refresh your screens. Maybe refresh. If you refresh your screen, maybe then you'll be able to clearly see the board. Please refresh your screen. Guys, the connection is good from my end. The connection is good. Connection is not a problem. Okay, so what I'll do is I will share these notes on the WhatsApp group, so you can see the notes while you are looking at the videos, so you'll be able to accomplish it. Okay, okay, guys, let's continue. See, the connection is stable from my side. Connection is not a problem from my side. Okay, okay. So the loss is 5,65,000. The loss which have been incurred on sale of this particular machinery is 5,65,000. Now this loss of 5,65,000 is definitely a capital loss. This is a capital loss. Guys, this capital loss will not be allowed as a deduction. This is a capital loss. Please look at this equation which I have made, the computation which I have made. Please look at this on the board. So I had purchased a machinery for rupees 9 lakhs. I had purchased a machinery for rupees 9 lakhs. Depreciation is 15%. WDV, which is remaining, is 7,65,000. Sales consideration, which is fetched by selling this machinery, is rupees 2 lakhs. So 5,65,000 is the loss that I have incurred. Now guys, this loss is in the nature of capital loss. This is in the nature of capital loss. Now guys, this particular capital loss is definitely not allowable under PGBP. Remember, question number 1, illustration number 1, I had asked all of you to do illustration number 1 of the study mat of the CMA Institute. So you had to do study mat of the CMA Institute. You had to do that particular question. And in that particular question, there was a case where the block was not there. So this is an individual machinery, only machinery in the block. When we sell this machinery and if we sell it at a loss, then it will not be allowed as a deduction under PGBP. But guys, for the power generating unit, this is a special privilege which is granted to power generating unit. What is the privilege? Privilege is that for power generating unit, this loss will be allowed as an expenditure under the head PGBP. This loss of 5,60,000, 65,000 will be allowed as an expenditure as PGBP. What a good benefit. What a great benefit, guys. Our PGBP income will reduce to the extent of 5,65,000 and our profits will be lower and our taxes will be lower. So this is a huge benefit which is granted to the power generating unit. So this is the benefit which is granted to power generating unit, and this benefit is known as terminal depreciation. This benefit is known as terminal depreciation. This benefit is only available to power generating units and no other entity is this benefit available. This benefit is known as terminal depreciation. Terminal depreciation, one of the most important concepts of your syllabus, which is actually related to power generating unit. Now, I hope you understood this particular computation and you understood what is the meaning of terminal depreciation. Now, the question is, sir, what if our asset was not sold at 2 lakh rupees, but it was sold at a higher price? Yes, guys, there might be a situation where our asset is sold at a higher price, which means the asset is sold for 8 lakh rupees. Please see on the board. The asset is sold for 8 lakh rupees and not 5 lakh rupees. The asset is sold for 8 lakh rupees. So 7,65,000 minus 8 lakh rupees, it comes to 35,000. So 35,000 is the income which is accrued on sale of this particular machinery. This is actually the income. Now, guys, if it is an income, just like expense was treated as an deduction from PGBP, income will be chargeable to tax as PGBP. You will tax this particular income as PGBP and you will offer it to tax. This income will be offered to tax. So if you sell your machinery at a higher rate, and which machinery? Only that machinery which is used in your power generating unit, which is PGU. If you sell it at a higher price, then that particular machinery will fetch an income. The income will be to the extent of 35,000 rupees. And guys, that particular income is the income which you accrue, and that income will be taxable as PGBP. Any expense will be taxable as, any expense will be deducted as an expense in PGBP. Income will be taxable as income from PGBP. That is the benefit which is given to you. Otherwise, apart from PGUs, if any terminal depreciation arises, it is not allowed as a reduction under PGBP. Your profits are not reduced, but this is a benefit which is given under the regime of PGUs, under the regime of terminal depreciation. Now, guys, the third scenario, let us come on to the third scenario. So what is the third scenario? Third scenario is that you are selling that machinery for 9,50,000. For 9,50,000, you are selling the machinery. You are selling the machinery for even a higher price than your cost. Guys, this can be a situation. You know, sometimes when you purchase a machinery, immediately after you purchase the machinery, the prices go up. This can be a probable situation. There is a situation that the asset prices go up. So you sold that particular machinery at 9,50,000 and your cost was 9 lakh. So your hands on the keyboard. I want an answer from you. What is the income which is taxable as PGBP under this particular situation? What is the income which is taxable as PGBP under this particular situation? What is the amount of income which is taxable as PGBP? Amount of income which is taxable as PGBP. I want to know whether your preparation for this chapter is up to the mark or not. Your hands on the keyboard. Please tell me. What is the amount which is taxable as PGBP in this particular case? Amount which is chargeable as PGBP. Vanshi says 50,000. Praveen Pandey says 50 capital gain. No, I'm not talking about capital gain. I'm talking about PGBP. Which income is taxable as PGBP? What income will be taxable as PGBP? That is what I'm asking. I'm not asking about capital gains, guys. Not about capital gains. Sorry. What is PGBP income? Everyone is writing capital gains. Nalayak, we are not talking about capital gains. We are talking about PGBP. What is the PGBP? Ravi Gupta, perfect answer. Perfect answer, Ravi Gupta. Very good. Very good. So I'll explain this entire concept, okay? Don't wonder, sir, you didn't explain and you're asking us the question. I was just asking who has prepared this particular part. That is what I'm asking. Yogesh, perfect answer, Yogesh. Okay. So first of all, let me tell you guys, what is the total income in this particular case? That is the question that I'm asking you. What is the total income in this particular case? The total income in this particular case is 7,65,000 minus 9 lakh rupees. Oh, 9,50,000 rupees. The total income which accrues is 1,85,000. Okay. So the total income which is there for this particular businessman, the total income which is there for this particular businessman is 1,85,000. Now, guys, this 1,85,000 will be taxable into two parts. The portion which you have received over and above the cost, which is 50,000, is taxable as capital gains. The portion which is over and above the cost price that is taxable as 50,000, that is taxable as capital gains. And the portion till the time till the cost, which means 7,65,000 is the WDV and 9 lakh was the cost price. So 9 lakh minus 7,65,000, this will be taxable as PGBP. 1,35,000 is taxable as PGBP. 50,000 is taxable as it into two parts. If there's a gain and the gain is even more than the cost, okay, even more than the cost you are realizing the sales consideration, then in that particular case, guys, you will get two incomes: income under the head PGBP and income under the head capital gains. And yes, the income under the head PGBP is known as balancing charge. The name of that particular income is balancing charge. So guys, now you will be able to understand this formula very well. And now no mugging up required, no ratification required. You will understand. You have already understood by logic. And if you have understood by logic, then logic is absolutely clear. Okay, guys, I'll just try to wait. I'll just try to refresh my screen. I'll just try to refresh my screen, okay? Okay, now is it better? Please confirm it is it better now? I've refreshed my screen. I've refreshed my live streaming. Please confirm if the board is better now. And of course, guys, I will send you these entire notes in the WhatsApp group. So don't worry about that. I will send it in the WhatsApp group. Okay. Oh, Sunny Kaushik is here. Jai Mata Di, Sunny Kaushik. Sunny Kaushik, this lecture is relevant for you as well because it is relevant for CMA final students as well. All right. It's clear. Perfect. Perfect, guys. Perfect. All right. So now the formula will become really easy. The formula will not be, you will not be required to mug up this particular formula. You will just be required to understand this formula. Now the formula will become very easy because you have already understood the example which I had just given. This example is very, very important, guys. Now let us read the formula and don't mug up the formula. Okay. No need to mug up the formula. So terminal depreciation or balancing charge is equal to WDV of the asset minus sales value of the asset. So whatever is the WDV, if I reduce sales value from that WDV, that will result into terminal depreciation or balancing charge. If this is a positive number, so guys, remember, 9 lakh minus 1 lakh 35,000. 7,65,000 was the WDV. Okay. So if WDV minus sales value, if it is a positive number, then it will result into terminal depreciation allowable as PGBP. If this is a positive number, which means WDV is higher and the WDV is higher and the sales consideration is lower. If that is the case, then it is positive. Then the entire depreciation is terminal depreciation, allowed as a terminal depreciation. If it is a negative figure, which means that WDV is a lesser amount and sales value is a higher amount. WDV is a lesser amount and sales value is a higher amount. Then, guys, the resulting amount will be balancing charge or capital gains. Balancing charge means negative balance. If the negative balance is till the extent of accumulated depreciation, that will be taxable as PGBP or business income, and the negative charge which is beyond the accumulated depreciation, that will be taxable as short term capital gain. So whatever you realize over and above the cost, if you realize anything over and above the cost, then that particular value is the value which is taxable as short term capital gains. That is how we are going to do it. So again, it is blur. Is it even blur now? Just wait. Let me reconnect the internet. Okay, guys, please confirm if the screen is better now. Please confirm if the screen is okay now. And am I audible to you? Am I audible? Is the screen also visible to you? Please confirm if the screen is visible. Okay, let's start. All right. So the formula which I was talking to you about was the formula on terminal depreciation. The formula is if WDV minus sales is a positive figure, then it will be terminal depreciation only and only in case of power generating units. If it is a negative balance, then up to the extent of accumulated depreciation, this will be a business income, which is PGBP income, and beyond the accumulated depreciation, up till the sales consideration. So from the cost till the sales consideration, it will be short-term capital gain. That is the bifurcation between the short-term capital gain and PGBP income in case of the when the sales consideration is much higher than WDV. So that is the concept of terminal depreciation and balancing charge for all of you. All right. So the next expense which we are going to deal with right now is the concept of change in rates of foreign exchange. So if there's a change in rate of foreign exchange currency, if there's a change in rate of currency which is there in a particular foreign currency, then guys, there's an expenditure which is arising out of that also. So, sir, what is this change? What is this expenditure? First, let me explain to you what is this expenditure, and then I will come on to the treatment of this particular expenditure. So, what is this foreign exchange currency difference? So, the concept is very simple, guys. Suppose you have purchased a particular machinery from a foreign country, from a foreign vendor, and you have to pay 10,000 US dollars to that particular person. Okay, but that person has given you a credit period. Credit period means you need not pay the purchase consideration, the cost in the first year, in the first month, in the month of purchase itself. You can pay it after 2 months. Okay, so the seller has given you a credit period of say 2 months. You can pay it after 2 months. So guys, when you had purchased this particular a service from that particular vendor, this is I'm taking example of a service rather than an asset as of now. So when you can take the example of asset also, anything will do. So when you had purchased this particular asset or expense, then the price was 10,000 US dollars, and at that date the dollars were for rupees 70 per dollar. Rupees 70 per dollar was the rate. So the total expense or the total value of this particular machinery or expense is 7 lakh rupees for this particular person, right? But when after 2 months, when we were required to pay these $10,000 to that particular person, at that point in time, the price of the dollars was a little higher. It was 75 rupees. So we had to pay 7,50,000 rupees to this particular person, and hence there was an enhancement of cost by rupees 50,000. That is the additional expenditure which we had incurred due to changes in foreign currency. So this additional expenditure which we had incurred due to changes in foreign currency is known as change in rates of exchange of currency. So whenever currency rates are changed, at that point in time, guys, we incur certain extra expenditure, and this extra expenditure is the expenditure which is on foreign currency, on account of foreign currency fluctuation. This expenditure is to be treated in a different manner. Now, 43A section will tell us in what manner will this expenditure be treated. So let's start section 43A, which deals with rate of exchange of changes in rate of exchange of currency, section 43A. So first of all, we are going to talk about capital assets. Okay, so if there are capital assets which you have purchased in foreign currency and you have incurred some exchange difference in that capital assets which you have purchased from outside, then what is the treatment of that particular foreign exchange difference? All right. So first of all, section 43A is applicable to, first of all, let's see the applicability. Applicability is if you have purchased an asset outside India, if you have bought an asset outside India, if you have bought the asset, and forex difference arises on account of payment to foreign vendor or repayment of foreign currency loan. So the first condition is that you can you have to purchase the asset from outside India. You have to purchase the asset from outside India. That is the first consideration. And which means cumulatively both the situations, both the conditions need to be satisfied. Secondly, the forex difference, the foreign exchange difference has to arise on account of either payment to foreign vendor. You need to pay to the foreign vendor, and due to that payment, due to a mismatch in the currency rate of the date of payment, the payment to foreign vendor will result into a foreign exchange difference. Or you are paying some foreign currency loan to a foreign bank. You have taken a loan from a foreign bank to purchase this asset, and while repaying that loan, of course, that loan will be repaid in EMIs on installment basis, and installment might accrue after 1 month, 2 month, 3 month, 4th month, and so on. And guys, the foreign exchange rate may differ month on month on month on month. So that difference in foreign exchange will lead to foreign exchange difference, and that is the applicability of this particular section. So this particular section is applicable on these things. So guys, my question to you is, if I have bought an asset inside India, but I have used foreign currency loan for buying that asset, will section 43A apply to me or not? Let me repeat my question. Suppose if I bought the asset from inside India, asset has been bought from India, it is an asset which has been purchased in India, and the foreign exchange difference arises on that particular asset which is purchased in India. I have taken a foreign currency loan to purchase that asset in India. Then will this section be applicable to me or not? Yes or no? Answer is no. 43A will not be applicable. Why? Because the machinery or the asset has been purchased in India. It has to be purchased outside India to make this particular section applicable on me. What is the treatment? Now let's see what will be the treatment of the foreign exchange difference which arises on capital account if we repay the foreign exchange in a different exchange and at a later point in time. When block exists, when the block of the asset exists, then we add it in the block. We add the foreign exchange difference in the block. Like guys, in the example, my 50,000 rupees, the foreign exchange was the foreign exchange difference. What will I do of this foreign exchange expenditure which I have incurred? I will add it to the block, and I will claim additional depreciation on it. That is the beauty of this particular expense, that although this expense takes place at a later point in time, but I will be able to claim the depreciation on it. I will add it to the block, I will add it to the WDV of the block, and will claim depreciation on this particular asset if the block exists. What if the block ceases to exist? What if the block is not there? What if the block is finished and my foreign exchange difference is still available? Sir, if the block has ceases to exist, it means that we have sold off the machinery. Then sir, how will foreign exchange difference still arise? Because guys, loan might still be there on you. You might be repaying the loan even after the asset is sold off. You might be repaying the loan to the foreign bank, and on account of that repayment of loan, there might be some foreign exchange difference which might accrue to you. That is treated as capital receipt or capital expenditure, which means it will not be allowed from PGBP provisions. It will not be allowed from PGBP provisions. That is the bottom line. So two things: when block exists has a different connotation, when block ceases to exist has a different connotation. Both the connotations are very different, both the treatments are very different from each other. So yes, this was foreign exchange difference. All right, one very simple section and one very simple provision which is there, and a very, very obvious one, guys. This doesn't need any special remembrance. It's a very, very obvious kind of a session. The session is the section is section on depreciation in certain cases. There are certain cases on which depreciation is leviable in a very different manner. Okay, so depreciation in certain cases. So there are three cases where we will discuss how the depreciation will be levied. Those three cases are: number one, amalgamation; number two, demerger; number three, succession. Okay, amalgamation means where two companies are coming together and they are forming a new company, or one company is getting incorporated in another company. That is known as amalgamation. What is demerger? Demerger means when there are two divisions of a particular company, and one division is demerged or is siphoned off, and a new company is created out of that division. That is known as demerger. Third is succession. Succession means when a proprietary concern gets transferred into a company, or when a partnership firm gets created into a company, or when a a sole proprietorship concern, or a company gets converted into LLP. Okay, so to avail benefits of the Income Tax Act, the form of the organization keeps on changing. Companies get transferred into LLP, partnership firms get transferred into companies, etc., etc. Now, guys, one common thing about all these three types of change is that depreciation for a certain period of time will be eligible to the predecessor company, and depreciation for the balance time will be available to the successor company. So in each of the three cases, in each of these cases, there is a predecessor company and there is a successor company where the asset is being transferred. So during the year, ownership of the asset is transferred from one person to another person. That is the bottom line of all these three cases. So in these three cases, the depreciation will be split into both the organizations based on the number of days the asset was put to use. That is the criteria. Now let us discuss one by one these cases. Okay, number one, amalgamation. Okay, so A company is the amalgamating company, B is the amalgamated company. So A is getting amalgamated to B, A is getting amalgamated to me, B. So depreciation of A asset, A's assets, depreciation of A's assets will be claimed by both A and B on the basis of number of days. Will be claimed by both A and B on the basis of number of days. The depreciation will be split into the two companies. Next is demerger. Demerger means A Limited gets transferred, or A Limited has two units, and it cuts off one of the unit. Unit X is cut off to X Limited. So A Limited, unit X is cut off to X Limited. That is the demerger scenario. Now the question is, sir, the depreciation which is there for unit X assets, should it be claimed by X Limited or should it be claimed by the erstwhile A Limited? Answer is both. Both. It will be split into two parts on the basis of number of days used, number of days for which this particular asset is used by both of the companies. On the basis of that, it will be split. Yes, guys, pro rata. Pro rata. We will first of all compute the entire depreciation divided by 365. Then the number of days for which the unit X was with A Limited, for those days depreciation will be claimed by A Limited. For those number of days in which unit X was part of X Limited, depreciation for those days will be claimed by X Limited. That is how splitting up is done. Then last case is succession. Succession means when a company or a firm or something else get transferred into some other type of organization. For example, a partnership firm get converted into a company, or a company gets converted into an LLP. This is known as the predecessor company. This is known as the predecessor organization. This is known as the successor organization. Again, the depreciation will be split into two parts. What is the two part? Predecessor company and the successor company. Depreciation will be split on the basis of number of days the assets are used by both of the companies. So guys, please note one very important thing in all these three parts, guys. Please note one very important thing. There is no problem for the assets of B Limited, because assets of B Limited were with B Limited earlier also, now also. There's no problem with assets of B Limited. Problem is with assets of A Limited. Who will claim depreciation for assets of A Limited? So the company which is getting diluted, or the company which is getting extinguished, those companies' assets stand a chance of splitting. So splitting is to be done for the company which is getting extinguished. In our case, A Limited is getting extinguished. If A Limited is getting extinguished, then guys, the depreciation which is eligible for A Limited will be split into two parts, A Limited and B Limited. That is the crux of the matter. That is the computation all about. So yes, this was a very small concept. The concept name was depreciation in special cases, and the special cases are three special cases in our case: amalgamation, demerger, and conversion. Conversion means a company gets converted into another, an organization gets converted into another organization. Demerger means when one part of the company gets transferred into another part, gets converted into another part. And amalgamation means when one company gets merged or amalgamated into another company. Those are the three parts. So this is the depreciation in special cases. Okay. Now we move on to a very important deduction of our syllabus, guys. Deduction in case of special deposit account, in case of growing and manufacturing of rubber, coffee, and tea. Section 33AB. Section 33AB deals with manufacturer and grower of rubber, coffee, and tea. So guys, special privileges are granted to coffee growers, tea growers, and rubber growers, because these three industries, the Indian government wants to protect these three industries in a financial way also. Therefore, some benefits are given to the tea growers, rubber growers, and coffee growers. So this section has been specially introduced for tea, rubber, and coffee. Section 33A(B), deduction for special deposit account. Now guys, please tell me one thing. I am earning money from my tuitions. Okay, I provide coaching to you. I provide mentorship. I provide guidance to all my students. I am earning income from that particular source of income. Okay. Now, I pay salaries to my staff. Please tell me whether it is an expense for me, whether it is a allowable expense for me or not. Please write in the chat box. I am paying expense to my staff. If I'm paying expense to my staff, then would that expense be treated as a deduction from my PGBP? Jyotish, concept of 50% of depreciation would not arise in case of forex loss. No, it will not arise, because put to use has been done earlier itself. All right, so I'm paying employee salary to my employees. Will it be allowed as a deduction? I'm paying salary to my employees. Will it be allowed as a deduction to me? Yes, it is allowable. Perfect, guys. Everyone is saying yes. Only Pankaj is saying no. I don't know why Pankaj is saying no. But yes, it is an allowable expenditure. Yes, it is an allowable expenditure. Now, guys, now. Perfect. This is an expenditure. Very good. Vishakha, Tanisha, Devadatta, Aditi, Sabita, Jyotish, Pankhudi. Very good. Yashika Jotwani. Very good. Question number 2. Out of my earnings, I deposit some of the earnings into a fixed deposit. I save it for my future. I'm a prudent person. I want to save something for my future. I deposit something in the fixed deposit. Will it be allowed as my expenditure or not in my profit and loss account? That is my question. Yes or no? I save something for my future. Out of my earnings, I do some fixed deposit and deposit it in bank. I save it for future. Will it be allowed as a deduction? This time, will it be allowed as a deduction or not? Please answer in the chat box. Let's see if it is allowed as a deduction or not. Rishabh says not. Perfect. Sarnika says not. Tanisha, Kirti, Ravi, Sabita, Vanshi, Rajan, Aditi Kumari, Ravi Gupta, Pankaj, very good. Nishant Prajapati, no. Absolutely no. Yogesh, no. Deeptesh, no. Very good, guys. Answer is no. It is not allowed as a deduction. But guys, the special thing is that in case of tea, rubber, and coffee, this deposit is allowed as a deduction. So you will be asking me, so what is so special about this deduction? The speciality about this deduction is that even when expenditure is not being incurred, but a fixed deposit is being created, even then the expenditure is being allowed. Even then, the expenditure is being allowed. This is the crux of this particular entire concept. Yes, there are certain restrictions on utilizing this deposit. At a later point in time, you have to utilize this deposit for a particular purpose only. There are certain restrictions which are required to be fulfilled. That is very true. But still, fixed deposit is allowed as a deduction. So this fixed deposit, which is allowed as a deduction, is the crux of this particular deduction. This is the special deduction for special deposit account. This is special deduction for special deposit account. Guys, just give me 2 minutes. Okay, so let's see what are the conditions which are to be fulfilled to claim this particular deduction, which is deduction for special deposit account, section 33 AB, rule 5 AC. So it is applicable to all the assessees who are into the business of growing and manufacturing. So two things are there: growing and manufacturing, tea, coffee, rubber. So if these three things are being grown and manufactured by an assessee, then guys, the deduction will be available to that particular person. Now, what is the quantum of deduction? What is the amount of before that? Where should this deposit be done? This deposit should be done to NABARD. NABARD is the bank, agricultural bank. So this deposit is to be done in NABARD within 6 months or due date of furnishing of the return of income. So the deposit is to be done with NABARD. The deposit is to be created with NABARD from the profits which are earned from growing and manufacturing tea, rubber, or coffee. The deposits are to be done with NABARD. What is the quantum of deduction? How much deduction will be allowed? 40% of PGBP will be allowed as a deduction, or amount deposited, whichever is lower. Okay, so amount which is deposited or 40% of the PGBP, whichever is lower, that is the quantum of deduction. Then what is the permissible withdrawal? So if you want to withdraw this money, then what is the permissible withdrawn? If you want to withdraw this money, then guys, you can only utilize this money for specified purposes. Yes, you can withdraw this money, but after withdrawing this money, you have to use this money for specified purposes. Specified purposes are the purposes like which are related to your tea, coffee, rubber business. Those are the specified purposes. So withdrawn will be permitted for specified purposes only. In case of closure of business, the withdrawn will be permitted if your business ceases to exist, if it doesn't carry on anymore. Then closure, dissolution, fully taxable. Death of the partner, partition of the partner, or liquidation, it is not taxable. So closure of business, withdrawal is permissible, but it will be taxable if you withdraw in normal circumstances. It will not be taxable if you withdraw in abnormal or certain typical circumstances. Lock-in period. Lock-in period. Yes, there's a lock-in period for the deposit which you are doing. Lock-in period is 8 years. Lock-in period is not applicable in case sale to government or local authority, succession of the firm to a company. So lock-in period is there, guys. Lock-in period means suppose you withdraw that particular amount, okay, and you employ it in specified purpose. Suppose specified purposes, you can purchase machinery from this particular withdrawal, okay. If you can purchase machinery from this particular withdrawal, then specified purposes, the purchase of that machinery, okay, but that machinery is to be kept with you for at least 8 years. You cannot sell that machinery for at least 8 years. So whatever withdrawn is done and whatever specified purpose is that particular fund employed into, that is to be locked in for 8 years. But yes, lock-in period is not applicable. You can make use of that particular fund for some other use also if you are selling it to government or local authority and succession of a firm to a company. If you are making your sales to government authority or local authority, and the withdrawn is being done on succession of a firm to a company. When you are withdrawing the money for succession of the firm to a company, so earlier you were a firm, now you are a company, so for that particular purpose you have withdrawn the money and you have again made the deposit, that withdrawal will not be called as withdrawal. That will not be called as breach of the lock-in period. Now, what is the taxable income in these three cases? What is the taxable income that is computed? So again, guys, just like presumptive taxation, this is also kind of a presumptive taxation where the income is presumed. So for tea manufacturer and grower, the income is presumed at 40%. For coffee manufacturer and grower, the income is presumed at 25% and 40%. So why this difference of 25 and 40? The difference is because if you are just growing coffee, then your income will be presumed to be 25%. If you are after growing, curing the coffee also, processing the coffee also, then your income will be assumed to be 30%. Then rubber, your income will be assumed to be 35%. So guys, whatever is your business income, first we will reduce the amount of 40% from that business income. First we will reduce the total amount of 40% from that business income, and then we are going to multiply it with the respective presumptive income rates and calculate the taxable income. That is how taxable income is to be computed in case of tea, rubber, and coffee grower and manufacturer. So this is section 33A-B, which is in case of three special businesses. The businesses are tea, coffee, and rubber. Okay, site restoration fund is a very, very easy concept that you can do yourself. I will share the notes with you, okay? And yes, guys, before we proceed further, please hit a like button, please hit a thumbs up button, so that I also feel motivated by this gesture of yours. So if you're liking the session, please hit a thumbs up. All right, next section which we are going to study is scientific research expenditure. Scientific research expenditure is section 35. Scientific research expenditure. section 35. This is the next section which we are going to study now. Now, guys, if you spend some money for researching, for doing some scientific research, then Government of India gives you special deductions and special privileges. Why? Because Government of India will always want you to find out something new which will benefit the economy of the country. Government of India will always want you to find something new, create something new, have some creativity in you. They will always want this. So they will give you certain additional benefit if you employ your expenses in producing something new or researching something new. So that is why research and development expenditure is critical. Just a second, guys. Okay. Yes, research and development expenditure is a special expenditure which is allowed when you or your company gets itself employed in in-house research or research through outside association. Whenever you spend some money in doing some research on your existing product or some new product, then guys, scientific research expenditure is allowed as a deduction. So there are two scenarios which are there. The research which is done in-house research, which means you in your company have developed a research center. You have some scientists with you. You have developed some research center in your company, and in your company, inside your company, you are doing some in-house research. That is your in-house research. Okay. Then second is research through outside association. So if you have done some research work not by yourself, you are not in your company, researching or finding about something. You are hiring some third party or donating in some third party who are doing research on your behalf. So in both the situation, deduction will be allowed. Now, what is the quantum of deduction? That is the point of consideration. All right. So if the research is being done after commencement of business, or if the research is being done before commencement of business, there are two scenarios. Okay. After commencing of business, you are doing the research, or before commencing of the business, you are doing your research. There are two scenarios which are applicable. If after commencement of business you are doing the research, then 100% of both revenue and capital expenditure will be allowed as a deduction. Now, this is the big thing, guys. This is the big thing. What is the big thing? Big thing is revenue expenditure is usually always allowed as an expenditure. There's no problem in allowing revenue expenditure as an expenditure. But the key point is, the special thing is that in this particular case, capital expenditure is also allowed as a deduction. Capital expenditure is also allowed as a deduction. Otherwise, guys, capital expenditure would usually be treated as your asset, and depreciation will be allowed on it usually. But in this particular case, capital expenditure is also allowed as a deduction, and that too 100%. That too 100%. So the entire capital expenditure which you have incurred, the entire revenue expenditure which you have incurred, that is debited to profit and loss account to compute the profit. That is the beauty of this section. That is the benefit of this particular section, which is 35, which is on in-house research. This is on in-house research. Okay, sir. Next is before commencement of business. If your research and development happens before commencement of business, your business has not commenced as yet, and before commencement of business, your there is some research and development which is taking place in your organization, then for 3 years before your business commencement of business, for last 3 years before you commence your business, your expenditure will be allowed. Revenue expenditure as well as capital expenditure will be allowed. Now, the revenue expenditure which will be allowed is not entire revenue expenditure. It will only be two types of expenditure. Number one, salary excluding perquisites paid to employees. So all the salaries which are paid to employees who are doing some research work for you, all the salary expenditure will be allowed as a reduction, and raw material expenditure will be allowed as a reduction, which is used for your business of research. So in researching, whatever expenditure is being used, that is the expenditure which is allowed. So raw material and salary is allowed as an expenditure. Raw material and salary is allowed as an expenditure. So only two expenditures are allowed as an expenditure: raw material and salary. Guys, this particular expenditure is allowed as a deduction. Now, capital expense is also allowed as a deduction, but capital expenses is allowed for last 3 years except for land. Land is not allowed as a reduction. Land will not be allowed as a reduction, but other than land, all other capital expenditure will be allowed as a deduction. Then next is, what if the research takes place through outside association, which means we are not incurring some research expenditure in our own organization. We are donating some money which are belonging to us for research to some other organization. What if that happens? Okay, so research through outside association, research which is not being conducted in house, which is not being conducted by the company, which is not being conducted by the business, it is not being conducted by the business. What will happen in that case, guys? In that case, 100% of the amount paid to that particular association will be allowed as a reduction, but the research should be of specific nature. This particular column will tell you what kind of research is eligible for deduction. Now, if you pay to national laboratory, university, IIT, if you pay to any of these three organizations, then scientific research will be allowed as a deduction. Only scientific research is allowed as a deduction. If you pay for scientific research, that will be allowed as a reduction. If you pay to any research association, university or college, then both scientific research and social science research will be allowed as a reduction. If you pay to some Indian company for doing some research, then scientific research will be allowed as a deduction. So you have to specify the purpose also for which you are donating. If your purpose is not related to purpose which is written over here, then deduction is not allowed. Suppose if I pay to some company to do some research on, say, taxation, will it be allowed or not? Please write in the comment box. Please write in the comment box, will it be allowed or not? I will pay to some company to research on some taxation principles, tax. Will it be allowed or not? Please write in the comment box. Will section 35 be applicable to me? No, it will not be applicable to me. Himani is absolutely right. No other person can. Oh yes, Jyotish, Rani, Pankaj, Sabita. Very good answer, guys. So you have to make sure that the purposes for which the payment is being done are these purposes only. Now, the last provision of this section is, guys, in case last 3 years businesses, in case last 3 years expenses are being claimed, then 100% of the expenditure incurred in past 3 years prior to the commencement of business should be allowed as a deduction. So this is the section which we are dealing with, section 35. All right, then sale of assets, the assets which are used for scientific research, if we sell off those assets, okay, and they get us some gain or get us some loss, then what will be the treatment of that loss and gain which we derive from selling of the assets? So sale of assets used in scientific research, so assets which are sold right now, they are used for scientific research, then what will happen? What will be the treatment of that particular sale of asset? So asset is sold without using any other purpose, and asset is sold after being used for some other purpose. These are the two scenarios which can happen. Okay, now sometimes what happens is, after the research work ends, then that particular asset is shifted to the normal business working. Okay, so for example, I bought a supercomputer for doing research. Okay, after the research was over, I transferred that supercomputer to my normal business. I transferred it to my normal business. My normal business was being conducted using that super computer. Now, when we transfer our asset for normal business from scientific research business, then guys, there's a different treatment. But if we sell the product sell the asset without using for any other purpose, then the treatment is different. So there are two different treatments which are prescribed in the act. So treatment number one, when without using for any other purpose you sell the asset, then sales consideration to the extent of cost of asset is treated as PGBP, and sales consideration over and above the cost of asset is treated as capital gains. So whatever is the sale of asset, so suppose if you had purchased the machinery for 10 lakh rupees, okay, you used it for research, scientific research, okay, obviously you would have claimed the expenditure on that particular machinery. 100% will be allowed as a reduction. Okay, now this was the cost. Now selling price is suppose 12 lakh rupees. Selling price is suppose 12 lakh rupees. There is a gain of 2 lakh rupees. Okay, there's a gain of 2 lakh rupees. Selling price is 12 lakh rupees. There's a gain of 2 lakh rupees. Now what does it say? Sale consideration to the extent of cost of asset will be treated as PGBP. So 10 lakh rupees out of this 12 lakh rupees, 10 lakh rupees will be treated as PGBP, and out of this 12 lakh rupees, 2 lakh rupees will be treated as capital gains. 2 lakh rupees will be treated as capital gains. 10 lakh rupees will be treated as PGBP. Sir, why this 10 lakh is being treated as PGBP, sir? This is not the profit. This is the recovery of the main amount. Yes, guys, it is recovery of the main amount. But remember, when this asset was purchased, it was 100% allowed as a deduction. When it was 100% allowed as a deduction, then naturally, if there's some recovery on this particular account, we will also treat it as income, our income. So 10 lakh rupees is treated as income, PGBP, and 2 lakh rupees is treated as capital gains. That is the scenario. Okay, sir, got it. Sir, what if the asset was used after using it for some other purpose, like after using it for normal business? So I had a supercomputer. I had first of all used it for scientific research. Then when the research was over, after that point in time, I used it for any other purpose. Any other purpose means I used it for purpose of my normal business. Then what will happen? After being used for any other purpose, then what happens? Sales consideration to be reduced from the block of asset. So I will reduce the sale consideration from the block of asset because now the asset would have been added to my block of asset. So sales consideration will be reduced to my block of asset. Cost of acquisition of such asset is to be taken as nil at the time of conversion of scientific research asset into normal business asset. So I'll give you an example over here. Right. I had an asset worth rupees 10 lakh, which was used for scientific research. Okay, this was used for scientific research. After 2 years, I transferred this asset to my business, to my normal business. Okay, when I transferred it to my normal business, then I transferred it at nil value because 100% reduction was already allowed from this 10 lakh while I bought it. The year when I bought it, 100% was allowed as a reduction. So 100% was allowed as a reduction. I transferred it to my business at nil value. Okay, now it is sold, and after selling it, I got 11 lakh rupees from it. So what will I do? I will subtract this 11 lakh rupees from my block of asset. I will reduce this 11 lakh rupees from my block of asset. That is the treatment which I'm going to do for sale of this particular scientific research, which is now forming part of my business assets. It was earlier scientific research asset. Now it is part of my business asset. So since now it is part of my business asset, I will claim it as my normal sales consideration, as if my normal business asset has been sold. Similarly, I will reduce this sales consideration from my block of asset. That is the treatment that I'm going to give. All right, sir, got it. So guys, simple treatments are there for these cases, and yes, these are important cases which are required to be fulfilled, which are required to be done. All right, last question, last section which you're going to do for today. Last section, section 35 AD, special businesses. Special businesses means what? Special businesses means if you are entering into certain special businesses, then just like scientific research, we had allowed 100% of the capital expenditure as deduction, right? In scientific research, we had allowed 100% as the capital expenditure we had allowed as a reduction. Just like that, if you are into certain special businesses, if you are into certain specified businesses, then guys, 100% of the capital expenditure is again allowed as a reduction, a huge benefit which is given to you so that your tax is reduced. Okay, so if you are into any of these businesses, so these are the businesses which are listed in section 35 AD. If you are into any of these businesses, what are these businesses? Cold chain, warehouse business, natural gas, oil, petrol pipeline, house which is located in slum or affordable scheme, hospital which has 100 beds or above, hotel 2-star onwards, fertilizer, inland container depot, container freight station, honey, bees, honey which is extracted from bee, and wax which is extracted from bee, slurry pipeline, semiconductor, infrastructure, heavy infrastructure industry. If you are working into any of these sectors, if you are working into any of these industries, then guys, we will allow 100% of the capital expenditure as deduction. Usually capital expenditure is not allowed as a reduction in first year, but we will allow 100% of the capital expenditure in first year itself. That is the beauty of this section. That is the benefit of this section, that if you are into these specified businesses, your capital expenditure will be allowed to the extent of 100% in first year itself. There are certain exceptions to this rule. Expenditure which is related to land, not allowed as a reduction. Goodwill, not allowed as a reduction. Any financial instruments, not allowed as a reduction. So if you have made any expenditure with respect to land, it is not allowed as a deduction. Just like section 35, guys. 35 also didn't allow land as a deduction because land cost is huge and it's a non-depreciable asset. We don't usually also give any deduction for land. So special deduction will also not be available for land. Next, payment above 10,000 must not be in cash. So while you are purchasing this asset, capital expenditure should not be more than 10,000 in cash. If you do any transaction in cash, then this particular deduction will not be applied to you, will not be eligible to you. Business should not be an old business. Machinery should not be a second-hand machinery. Business should not be made by splitting up or reconstruction of existing business. So sometimes what happens is, guys, people are very smart. After advent of this section, they knew that they did not had any new business. They were having an old business. But after advent of this section, they would try to restructure their business. Okay, they would try to reconstruct their business so that they fall into this category to take benefit of this particular section. But no, this section doesn't give benefit to the old businesses. It only gives benefit to the businesses which are established after a particular period. Okay, so the business which is made after splitting up or reconstruction, that is not eligible for this deduction. And no second-hand machinery is allowed as a deduction. If you are purchasing second-hand machinery, it will not be allowed as a deduction because we will want to initiate capitalization. We want to initiate resource capital assets. New capital assets should be created by you. New capital assets should be bought by you. That is the endeavor of Government of India behind this particular section. So yes, guys, this is the section. And yes, if you falter in this section, if you do not fulfill the conditions of this section, which means you falter in this section, then if you purchase the machinery but you sell it quickly, you sell it very, very quickly, then guys, the deduction will be reversed and it will be treated as deemed income. The deduction will be reversed and it will be treated as deemed income. It will be income in your hands. So deduction which is claimed, less notional depreciation which would have been there if the asset was used in normal business purpose, rest will be deemed income in your hands. Your income will be enhanced by that amount. Your income will be treated as income in your hands. So if you sell that machinery very, very soon which you have purchased, then we will include that in your income. This is treated as deemed income. Let's take an example. Mr. Omer Khan purchased machinery worth 10 lakh in financial year 15-16. Eligible for deduction under section 35 AD. In financial year 18-19, so after 3 years, he had transferred this machinery to an ineligible business. He transferred this machinery to an ineligible business. What is the tax implication? So guys, in financial year 18-19, the entire deduction will be taxable as income in this particular case. Entire deduction will be taxable as income in this particular case after the relevant period. Okay, so notional income will be deemed income will be accrued in hands of the assessee if miscompliance happens. If the miscompliance happens, then notional income will be taxable in hands of the assessee. Okay, guys, so this was section number 35D. And just to remind you, till this particular section, we will have test in our next class. We'll have test in our next class, on Sunday 7 p.m. we will have test till this particular section. Okay, section is section 35AD. Till section 35AD, we will have test on Sunday. So please be prepared. Since PGBP is a huge chapter, so I will take test in 2 or 3 parts. Okay. On this Sunday, the test will be of this particular chapter, which is PGBP till section 35 AD. From your study mat of the institute till section 35 AD, we will have test this Sunday 7 p.m. we'll meet for test. And yes, guys, before we sign off, please hit a like button on this video, and yes, do share these videos with your friends. I will also be saving these videos on the Google Drive in an unencrypted form. You can download the videos from Google Drive in the unencrypted form also. YouTube also, it is available absolutely free of cost, open for all. Strictly adhering to CMA syllabus. It is entirely based on the study mat of the Institute of Cost Accountants of India. So you need not study anything extra. You need not study anything less. You are actually studying which is relevant, the thing which is relevant for your examination, which is CMA examination. That is the beauty, that is the USP of these lectures. So yes, that's all for this particular section. Thank you so much for joining in early morning. on Navratri. I know that you must be having a lot of festivities and pujas at your home. Still, you're joining early morning regularly. That is the motivation for me. That is the blessing for me. And it is a big, big, big hats off for me. So thank you so much, guys, for joining in. And yes, do hit the like button. And we'll be joining Sunday, 7 p.m. for the test. So how to join the test? If you want to join the test, then please get yourself added to a WhatsApp group. WhatsApp group is there on this number 9643929913. WhatsApp group will contain your details of your test, details of the live sessions which are upcoming, details of the PDF which I'll be sharing on the WhatsApp group. Everything will be available on the WhatsApp group. Please join the WhatsApp group on this number 9643929913, and I'll be seeing you on Sunday. Yes, on Sunday I'll be seeing you for the test. We'll be meeting on test, and next week, Tuesday and Thursday, both days, we will be completing PGBP, and we'll be starting one of the most important, amazing chapter of our syllabus, capital gains. Yes, till the time we meet again, all the very best and happy studying. Bye-bye. Bye. See you guys. Happy studying.